Good morning, everybody. I'm Daryl Jones, Director of Research at Hedgeye. Welcome to the first edition of In the Arena. We have Bill Pulte here, which I'm very excited to talk to. I just want to apologize. We had a few technical difficulties this morning, Murphy's Law as usual, but we are here and we are live. And thank you,
I had a
Bill.
late Uber driver and then technical, so it is what it is.
But here we go. So I want to get right into it. I think, Bill, as we were talking about early on, people see you on Twitter, see your followers, see the charitable stuff, but they don't really know too much about your business background, which, when we first spoke 3 or 4 years ago, really intrigued me because, number one, you're very involved in Pulte Homes and the turnaround, and then you're very involved in private equity investments sort of coming out of the Great Recession. So maybe you could just tell people a little bit about your business background.
Sure. In 2011, I started my firm, Pulte Capital. I started with my grandfather, and he had retired as the chairman and at one point was the CEO of Pulte Homes. So I had him as an incredible mentor. 2011, we started buying assets. I actually went in and ran the assets as the CEO. We owned a big countertop company. I ran that business. 2013, I bought another business. 2015, I bought another business. And then in 2016, I had a huge liquidity event. I sold it for $73.5 million myself.
Yep.
So I made a bunch of money in 2016. At the same time, I was seeing Pulte Homes go down the toilet by the CEO who was just making totally selfish decisions. And so I got involved. This was a very public fight. So I was on TV every week saying, this guy's got to go and all this stuff. And we got Elliott Management involved, which was the big activist hedge fund. Yep. And we turned around the company in 2016. So I was very active in it. And frankly, I think I'm still active in it, albeit in a different way from the outside. But I was a director real quick for 4 years. For 4 years, I was a director of this company. And now what's so odd about all of this is they're trying to underplay. It's just complete lies. Yeah. I was a very, very active director for 4 years, getting paid whatever, $240,000 a year. Yeah. They said I was an accredited director and everything, and we'll get into it, but it's pretty wild.
Yeah, so I wanted to ask you, fast forward 2020, I guess you get removed from the board. What happened there? Like, what was the background?
Basically, they had gotten rid of Elliott Management's director. And Elliott Management, for those who don't know, is a $35 billion world-class investment manager. Yep. These guys, they are no nonsense, no BS. Yep. They go in and they fix companies. When they kicked him off, I said, it's only a matter of time before they're coming for me. And Ryan Marshall, who is the CEO of the company, who, now there's a story of what's going on there, he conjured up this whole fake idea that I was somehow violating trademark by using my Pulte Twitter handle.
Using your last name.
Using my last name. You can't even make this stuff up. And this stuff will all come out, and it always comes out. It's just sometimes it's delayed.
Hopefully I can still use Jonesy.
It's a total, it's just deceitful. So he went in front of the board, made me look like a bad guy, said he won't give up his Twitter handle, which is basically confiscation of board directors' property. It's crazy. So he essentially pushed me off the board. Marshall did. Yeah. I think it was a terrible decision, in my opinion, not even just for the company, but for everybody involved. It was just stupid. And I kind of was minding my own business. We had turned around the stock. We got involved when it was at $16, $17 a share. Yeah. By the time I left the board, it was in the 40 something. So, this stock had really had the right direction. We had made the right decisions, in my opinion. And since then, it's just continued on the trajectory of the turnaround, despite the shenanigans of Marshall. Come to find out, in this period of time, the CEO, this Marshall's guy's right-hand guy, was running fake Twitter accounts under aliases to attack me.
And then one of the tweets, I haven't followed that closely, but I did a lot of reading in the last 12 hours. Wasn't one of the tweets about your father and golf course or something?
Yeah, he said that my father burned down his country club golf course. This was the executive at Pulte Homes, the right-hand guy, Ryan Marshall, was alleging and trying to say that I was saying that my father had burned down this golf. Totally bizarre stuff. This stuff is not normal.
How did you is it a fact that it was him?
Oh, it was, yeah. Now it's all proven out in litigation. Originally, they tried to, obfuscate it and everything. And now it's proven in the court of law that he's had to come clean in the court of law that it was it. But he had this 25 or 30-year-old Asian lady that he was pretending to be, a Pulte Homes employee. Her name was Catalina Chen. Okay, he was, he's not Asian and he's not a lady as far as I know. And he was pretending to be her. He took an identity from a dead guy in Kentucky and used that. He's now being sued by a physical trainer in California because he stole the physical trainer's identity to run one of these bot accounts, these fake bot accounts, to attack me. And then recently we uncovered in litigation, and this thing's far from over, that he was impersonating my dead grandfather to run these accounts. So this guy had all these different identities.
But why? Why do something?
I think they want to take me down.
You're like a senior executive at one of the largest home builders in the country. Like, why even spend the time on it?
Incoming chief operating officer.
That's crazy.
Crazy. Right-hand guy, and he's still the best friend to Ryan Marshall.
Yeah.
And that's been the most disappointing thing is Marshall hasn't come out and said this was wrong. Marshall still hasn't even apologized to me. I mean, I'm very disappointed in Ryan's judgment.
So, another part of this is CEO compensation. And I saw you tweet that the CEO Pulte makes $52,000 a day. I know CEOs make a lot. I also, we talked about this before the show. The CEO Pulte sold about $10 million in stock, and the next day, or maybe that day, you bought that same amount of stock. So what are your thoughts on, I guess, the CEO compensations, particularly at Pulte, and, what they're doing with the stock that they're given?
Many of these CEOs are way too overpaid. And, I'm fine, to the extent that it's a founder and they've really created value and things like that. But these guys, they become coupon clippers. In my opinion, this Ryan Marshall's really become, and I think his behavior indicates it, a real, like a rent clipper. He's just there to just get his $52,000 a day. The longer time he can go out, and he'll be worth $100 million in no time. Yeah. How does that benefit the shareholders? And now, there's a situation at Pulte where because of the turnaround and because of where interest rates and housing has gone, these stocks, including all the builders, are at all-time highs. But why are these CEOs who are claiming that they care about the company, that they're such a great CEO and they believe in the future, then unloading on dumping on the back of retail shareholders? Yeah. This is what I got in Charlie Gasparino with the other day. It's like if you want to talk about stock pumpers, the biggest stock pumpers in my mind are these bad CEOs that are going out there pumping up the stock on quarterly earnings calls and then jamming the stuff down people's throats with stock sales.
So going back to Pulte, to your point, a lot of the home builders have done well. But Pulte at one point was the largest home builder in the country.
Correct.
Now, I think you said 4. If you were running the company now, how would you get it back to being number one? How would you turn it? I don't know what the market cap is now.
It's about $20 billion.
$20 billion. How would you go from $20 billion to $100 billion over a course?
Yeah, I think it's going to happen, in my own opinion. It's just my own opinion. And I think it's a matter of time. I think that there are some things that people can do, specifically the management team, to get it there. That's why I'm so vocal that, these executives shouldn't be running fake Twitter accounts. They shouldn't be trying to cut me off of Fox Business.
Oh, I was going to talk about that. Yeah.
You know what I mean? How can you be running a company and be firing off emails worried about, me going on Fox Business and CNBC? We haven't even cracked open what's going on there. Yeah. You won't even believe it once you see it. Yeah. But what are these guys doing this kind of stuff? So I think there's a real credible business plan. I'm probably going to be coming out with something pretty soon. Okay. That's gonna outline that. But there's a real way to do it, and there's no reason that we can't beat DR Horton, Lennar, and NVR. And they're smoking. The CEOs there are just they wouldn't play these kind of games.
Yeah. And the one thing you also said to me was 2 weeks before your grandfather died, he basically said to you, save this company, make sure it doesn't get taken over by somebody.
Make sure it doesn't go down the toilet.
Go down the toilet, preserve the name. So that's part of what's driving you. Family, or not part, maybe 95% of.
Yeah, and that's why it's like they can't figure out why I care. They can say, oh, this, that, the other thing. It's like, it's not about the money to me. To me, it's about, and anybody would feel this way. If you have a family business, if you love your parents, you love your grandparents, you spend your whole life building a family business, it becomes a publicly traded company. Yeah. And then you see these overpaid executives going in. I think anybody who's reasonable in my position, yourself included, wouldn't just sit there and let these guys just, take resources away from the company. Yeah. And, there's a lot of employees that I care about. There's 6,000 employees at Pulte Homes. That's why when the CEO sold the stock, I was like, screw that. He's out there showing negative sentiment to the employees. So I went and bought $11.9 million worth of the stock.
And do you still own the stock?
Oh, yeah.
Yeah. Okay.
And by the way, I'm up on it. So
there you go.
It's like 17 million now or something like that. So it's like, where's this capital allocation nonsense?
That's true.
If he's dumping the stock. So.
Yeah. Okay. So I wanted to pivot and get into the reason you went on Fox, which was, I think you and Charlie had a back and forth on Twitter, and he, sort of directly or maybe indirectly or maybe even directly accused you of getting people into these very risky investments and you were going to cause them to lose money. But I don't think that's quite the truth. Like, I think, you've been pretty clear that you could lose all your money on any investment. And at times you've also said, for a lot of investors, just buying the S&P 500 or a broad index is the way to go. But what are you trying to do?
I mean,
there?
that's the safest way.
Yeah, safest. So
I would say put it in spot the mattress, but then you got this thing called inflation.
Yeah, exactly. But what are you trying to do here? I've actually just joined your AMC community. and you're starting other communities.
I got 8,000 in the BBBY community.
Yeah.
That's another community.
But what is the plan with all this? Like, why even bother?
Well, first of all, I really love what Hedgeye's done. I really love what you guys have done. I think you guys are the future of financial journalism. I've been a big fan of yours, big fan of Keith's for a long time, Mike Taylor's, et cetera. And I think that it's the future. And I think people are sick and tired of these overpaid executives. They're sick and tired of people going on these TV networks and with all these fancy language. The one thing I love about what Keith does is that he has empowered like Rob Simone in MPW. He's not afraid of these legal threats. And I think that's also where some of the big networks are going to get is they don't like being threatened by some of these big public companies. Now, some things have to change, I think, institutionally with who's owning these stocks, BlackRock, Vanguard, Fidelity. I think that eventually will be disrupted too over time. Yeah. So I'm just trying to, contribute to it. And, to the extent that there's opportunities to, put forth your guys' content on these things or put forth other content, the average user, I think, needs to get educated. And a lot of these people are in AMC, Bed Bath & Beyond, all these different stocks. They're not bad people. They just are sick and tired of being told, hey, you can't participate in the stock market. It's not, it's not for you. It's just for some elites on Wall Street. That's why I love what Hedgeye stands for. And that's why I cheer on Rob Simone, like uncovering the fraud. Because if Rob's not going to do it, who's going to do it?
So AMC's...
If we don't do it, who's going to do it?
Oh, no, exactly. Somebody's got to be the voice for the people, effectively. AMC is an interesting one. We obviously have analysts on the stock. He's been negative. It made people a lot of money. And then, it also has really hurt a lot of people. Just even in your community, you can see people complaining about how much they've lost. But part of this, I think, is an opportunity to teach people, right? Teach people about risk management. Like, if you want to invest in AMC, be aware of what it is.
Yeah, I specifically say you can lose all your money.
Yeah.
And by the way, you can lose your money in everything.
Yeah, exactly.
Theoretically, you can lose your money in the S&P 500. You could lose it in the Pulte homes, et cetera.
But you did buy AMC.
I bought, a small portion of AMC, mostly just to show that my sentiment is with the retail investor.
Yep.
That, that there is some merit to it. And I think that's why we had an event. We had 250 people show up in Atlanta. In the airport hangar. It was like a rally for just stock investors. Yeah, we have another one in Atlanta. I think there's going to be 500 people there. Yeah. People are sick and tired of this stuff. Yeah. And they want to take back the power.
And then Bed Bath & Beyond, that's an interesting one because I think if I have this correct, you actually bought Bob.
I did, yeah.
And what's the play there? I mean, again, it seems to be to get more information to help inform people.
Basically, that's it. I'm going to give away any money that I get on the bonds. I'm not in this for the money with regard to empowering these different people, but I saw that the BBBY people were good people. They knew, I think, just my opinion, that they were getting into a risky situation. Yeah. But the lack of answers from people, let me just look at it through the lens of like MPW and what Rob Simone's done there. You have this guy, this Mark Triton guy, and this is just my opinions, but he was the CEO of Bed Bath & Beyond. He goes and he does these buybacks and basically drives the company, in my opinion, into bankruptcy. And then he gets to walk away unscathed. Yeah. How is that fair? How is that fair? And so at a minimum, it needs to be like, okay, how much did Triton walk away with? How did these buybacks go down? Yeah. What is the waterfall from the bankruptcy? He's this executive now. I think he's on the board of Nordstrom's or whatever. Meanwhile, all these other retail shareholders are left with the bag. So for me, it's just all about transparency. And again, it's kind of the same ethos that you guys have.
And then one thing, you actually texted me on the side saying you weren't talking about us, but you also, I think it was with Bed Bath & Beyond as well, but maybe another stock, but talking about short sellers and maybe some of them aren't as reputable as maybe we tried to be or whatever, but like, what are your thoughts on short selling?
Well, my comments really on short sellers are, first of all, that just generally speaking, these guys who literally all day long, and this is what I like too about Hedgeye, is that you guys also go long, and you guys don't want to, in my opinion, from what I've seen, want to destroy people's lives. Right. Some people are actively rooting against these different companies. Like, I have people that are actively taking out shorts on Pulte Homes because they want literally my family and I to go bankrupt, and that's their entire ethos for doing it. Right. It's not because it's some hedge. It's because it's literally a vendetta against me. So, I put out a fairly inflammatory tweet and, about short sellers. And there is some nuance to that, right? Like, I think, often what you guys are doing in hedging risk, I think there's some differences. I also think that, this whole idea just in life of betting against people, I think is a very miserable way to go about doing things. And so I just try to say, to the extent that we can, going long something, in my opinion, at least for me, is more mentally healthy than, wanting to see stuff go down.
Yeah. I mean, I think we really try to find short opportunities where people could lose a lot of money because something really bad is going on at the company, or they may lose money or there may be better long opportunities in a shorter period of time or something like that. Before we bring in Mike, though, I wanted to go back to
Gasparino.
Well, Gasparino too. I mean, that was interesting. The biggest thing to me was that the company tried to deplatform you.
Yeah, do you got that email up?
Yeah. Can we show this email? I don't know if we can pull it up. It's an email. Yeah, I just like again, I go back to why even bother, right? Like you're running a company. Like
they're running not even a company, they're running a Fortune 500 enterprise.
I would want the the founder of the company's grandson to be an advocate for my company. I would want to be an ally, not deplatform him.
Yeah, not try to villainize him and engage in all this behavior. They should be putting their arms around me instead.
Yeah.
You know, they're literally trying to throw me off a canyon, which is not going to happen. But yeah, that was wild. You saw that email. So they went and they emailed Fox Business, and you know, we know of others, and you know, this will all.
Can we ask how you got it?
You know, I think that there are a lot of people that, you know, and this is indicative of what happened after I, you know, saw this most recent thing, is that people are uncomfortable with that. That is not proper behavior of a sitting public company executive. So I think if you engage in dark behavior, you know, in my opinion, which that shit's going to come out.
Yeah.
And they should be, you know, so more to come on that.
Okay, one last question, then Mike's coming on, but this is going back to housing, but you know, your thoughts on the U.S. housing market.
Yes.
Like you know a lot about it more than any of us.
Well,
to me, it looks pretty interesting, you know, especially as rates come down because inventory is so low. So the home builders should really benefit.
Well, let me just say one thing, because that email said something essentially attacking my qualifications. That I wasn't an expert on Pulte Group, okay? I grew up in this business, number one. Yeah. Number two, I was trained by the guy who founded and built the company. Number three, I was a sitting director for 4 years and led a turnaround with Elliott Management, the world's biggest investor on the company. Yeah. So I want people to know when I say this, you know, that I'm saying it.
There's some knowledge,
you know, because, you know, you read these emails, and this is what they're trying to do, right? They're trying to deplatform me from you, from Fox, you know, et cetera. Not necessarily you yet, but we'll see. But and I don't think it will be successful. But my point being is, okay, so what knowledge do I have that, in my opinion, you know, allows me to look at it and say what is unique about home building right now? What is unique about home building right now? And again, a lot of people look at this and say, "Oh, you're just a housing guy." But let's say back 10 years ago or so, the market share of the top 10 builders was less than 10% in the United States. Today, their market share is over 30%, headed to 40%, and I think it will be over 50%. What does that mean? That means that these big builders, whether it's Pulte, D.R. Horton, Lennar, they are gobbling up all of these small builders. Yep. That is the untold story. You're not going to see that in these, you know, different Wall Street Journal pieces and stuff where, you know, they talk about, you know, inventories being bought up by BlackRock. You're not going to see that. But that's what's happening. Why is that happening? It's happening because these small builders do not have the capitalization that these big home builders have. And after the Great Recession, there was not a lot of financing for land. Yeah. All of the local banks and small banks, these were the big lenders for these small home builders. Now what you have is you have these mammoth builders. Think about them like automakers, like, you know, like they're just going to take the market share and they're just going to own it. Yep. So when you're going along these builders, I think you're also going along market share, basically aggregation of housing in the United States. Of course you have the inventory issue. Of course you have rates going down. But I just can't emphasize how much market share is going to be important. Then demographics. You know, I also think too, you know, one of the things, Daryl, that we've said, and we haven't really talked about this, and I have my brother here today, and one of the things we're meeting with people in New York is we're going in and buying actually mobile home parks, believe it or not, the Pulte family. Yep. We're going in and buying mobile home parks because they're already zoned. And then, Daryl, what we're doing is, because they have this monopoly on zoning, is then we're bringing in new homes and making these new communities. Yep. So my point being is, these big builders, they have the zoning capability, because they can take down large pieces of land, they can invest in the infrastructure, so they're going to continue to take market share. Zoning is worse than ever. Immigration, I mean, the amount of people coming in from the Mexican border is insane. And what that does is it actually, like in the mobile home parks, it actually raises rents in mobile home parks, and then it just pushes everything up. It pushes up single family rentals. Yep. It pushes up apartments. It pushes up home builders. So I think that there is going to be a secular trend in home building for the next 10 years if you're along these names. Now, of course, you know, housing is interest rate sensitive, job sensitive. This shit can go down.
Yeah, it's economically sensitive.
Of course. But that's the untold story of what's going on in housing.
Okay, Mike, let's bring you in.
What's up?
Thank you for
giving
me a carpet behind me. So for
you're a good man.
All that didn't know, Bill Pulte and I met on Twitter. And I didn't know he was Bill Pulte of Pulte Homes at the time, and we hit it off and we talked for months. I didn't figure that out until like 4 or 5 months later.
I remember you asking me that.
And this is a direct reflection of my IQ. So just so you know.
It was one of the best, isn't it?
Yeah, absolutely. All right. Well, I have to ask you a question since you're here, and it's going to be very broad and general, but what is happening in the economy, the world right now? Like, how are you thinking about the markets? And, I know you always have all sorts of thoughts and ideas and positions on, but like, if you can summarize it up and
really to sum it up, and it's been said before by many leaders out there in investing, is that the American grandiose world that we live in is financed by a federal government that is spending like we're in the depths of the Depression. And you couple that with a unemployment rate that's very low, and we're going to be where we are right now, where everything is popping and moving, and most of it is government spend. My biggest fear that I have, and we've talked about pricing power and so forth, you'll see it, like for instance, HZO reported this morning and blew up, and that they have negative pricing in yachts. And I did some checks on it, and yes, the pricing is negative, so I'm negatively positioned for this name.
So you just sold your yacht.
Yeah, exactly. No, I was smart. I never bought one to begin with. That's you have a yacht, right?
No.
That
doesn't make
got me all excited. Well,
that doesn't make money.
I tell you, your best friend should always own a yacht. So it's you, not he.
So it'll be him, man.
But my point is that this spending comps terribly for 25, and the government. There's two things that have to happen next year for 25 is that the Trump tax cuts for corporates have to be immortalized, because they all are supposed to sunset, and that's going to cost a lot of money. And then we're going to need about $1.5 trillion in excess government spending to deliver GDP to a higher number year on year. And both of those are unbelievably difficult to do. Nothing will be agreed upon. And so we're probably going to have an air pocket in 25, and a big one, a giant one. And that's what I'm worried about, just sequentially. But even beyond that, the things that we have to deal with are substantial. We have to deal with a government, let's say, entitlement system with Social Security and Medicare that is probably going to drive up $30 trillion in deficits over the next decade or 12 years or so. And we have to find a buyer for that. So I think that there's going to be banking regulations changes, insurance companies regulation changes in the not too distant future, which is exactly what Japan did to find/force a buyer of U.S. Treasuries. And that largely has to do with 45% or so of our treasuries are bought overseas. So we have to have an OUS buyer in order to keep the ship afloat.
So how do we bring this to the here and now? Like, and actually a question for both of you, because I know, Bill, you do a lot of investing in your family office, but how are you positioned today?
I am pretty neutral right now. I'm long Select Healthcare, and I am one of the largest shareholders in the Pink ETF, which I manage myself.
For people who don't know you, because a lot of my followers are tuned in right now, you run a big ETF. You're an investment manager, hedge fund guy.
Oh, yeah, you should maybe give us a little bit about your background.
Just in my followers. Everywhere Hedgeye knows him.
Well, I started out as a scientist doing drug development and transitioned from that into an investor. And I've been an investor / hedge fund manager of healthcare investments for most of the past 20 years. And for the past few years, I've been working on the Pink Fund, which is the only actively traded ETF, does healthcare, where the fees and my compensation goes to the Susan Komen Foundation for breast cancer. So we can do well and do good.
I like that. So
that's my kind of hedge.
I like that. There are many of them, but so you're basically neutrally positioned right now,
pretty neutral
on some healthcare.
And what I'm trying to be on is short negative pricing power. And it's going to permeate. And this is automakers, things like that yacht seller, HCO, things like that. And against that, I'm actually long in a surrogate way an interest rate trade. I'm long one of the lenders into the mortgage market, specifically retail mortgage, because I think we are going to have a transition of lower interest rates and more homes, same-store homes, like existing home sales, being turned over a lot more moving forward.
And then, Bill, we know some of your positions, big position in Pulte Homes, small risk-adjusted position in AMC. I also learned something, a big position in Mr. Beast. I like that. Yes. But how are you thinking about your positioning within your family office and what you see out there?
I think that one of the things that we're really focused on is owning hard assets that cash flow that will appreciate with inflation. One of the things that I've really appreciated with Hedgeye and learning from you guys is the growth inflation model. Yeah. That has been super helpful for me. I mean, I just first want to give you guys kudos. I
appreciate
that. The whole quad angle and the whole inflation, that has really opened my eyes. I knew a lot of this stuff instinctively, having grown up with my grandfather and learned a lot about business and building my own businesses. But that kind of angle, and for all my followers who are listening, I encourage you to go get these guys' products. But the inflation and the growth angle is so important. And the way I look at it is, I think inflation, even though, it's going to be going down year over year, I think long-term it's a big issue for all the reasons he's talking about with financing. So we are going along what we know. We know single-family rentals, so we're buying. This is partially where Pulte Homes is leaving a lot of money on the table. This is what I think is going to get them to be bigger, is going to be through single-family rentals. We are also buying mobile home parks, Daryl, and we are going along those, and we are coming in and we are revamping those, and we are making these nice communities where people can live. Why is that? That's because mobile homes and mobile home parks are grandfathered in from a zoning perspective. Zoning is a huge problem, and you can't build anything in this country anymore without. They're more worried about a turtle sometimes, bothering a turtle and a bird than they are, new subdevelopments. So, we're going along. We obviously have positions in the market. Obviously we follow Hedgeye stuff. And we've got substantial positions in the market. But that's really where we're looking at is and how can we create value in these markets that we think are just going to go up. Meaning, single family homes and stuff. We think that's just going to be a home run investment for the next period of time.
So, Mike, I want to pivot back to you. We talked a little bit about short selling earlier, and there is some negative connotation about short selling. There are some negative actors within the short selling community, but you were basically not just a short seller, but you professionally shorted for 2 decades or whatever. What do you think the role of short selling is in the market, and how do you think a more simple version for maybe some new listeners, like how should they think about that aspect of investing?
Well, when you say short selling, it just gets me excited.
Yeah.
And in that excitement, happy birthday to you.
Thank you. I appreciate it.
So 50, I feel like I've been shorting for 50 years in a diaper again to work. Look, short sellers are a different breed, Mark Coyotes. Definitely cut from different cloth. I do both. I go both ways in a big way. And I had to. Most of it is sort of like an attrition by semi or certain execution, where you get sat in a seat, people are shooting at you, and then at the end of the war, you look over and see who's still alive and who's not. And most don't make it, and it's because of shorting in the hedge fund world. That's why they don't make it. And you find out over time if you're any good at it or not. And what I found out was that I was good at it. I never really wanted to be. It's very hard to do. Everybody hates you. But usually the most simplistic part to short selling is stuff that doesn't make sense. And like you talked about MPW earlier, they've been running these shenanigans for years of this nonsense of them building their own debt, giving it to the renter taking that debt on so that they can pay the rent back to MPW. So it's this circular dog shit that just... And the stop was, all of a sudden, the cost of capital went up for MPW because it went up for everybody. And that was the beginning of the expose.
How are these guys not gone? My focus really is on the
I'll tell you why.
And stuff, because I know you can make money, you can short these different things and stuff, but it's like, how are we letting executives like this run companies like this in America?
Boards. Right?
I know. Board. I know.
Yeah, you heard about this. So just so you know, I'll explain it to you how it works. Is that when you're on the board, you want to either be CEO, or if you are CEO, you want to stack the board with people who are your buddies.
Why do you think?
And they get consulting agreements. They get they can borrow from the company to get a yacht. Like MPW. And most importantly, you have the compensation board. Now, that's the most important group on the board to be in charge of.
And by the way, that's partially why the CEO, in my opinion, wanted me off. I was on the compensation committee.
Oh, I want you off right now. I never want to see you again. You're the worst guy. You're the worst guy to be on it.
But I wasn't going away.
I hope not. No, I hope not. Pulte for president, by the way. Don't forget it.
All right.
Anyway,
Sorry, yeah, finish
so
your thought.
shorting, just getting back on shorting, is that you find things that don't add up, and then you need to attack, and that's it. And Coyotes does it in a very public way. I do it in a very private, quiet way, where I send to some of my friends. It's really curiosity. Where am I wrong here? How am I wrong here? And that's really the secret to shorting, is understanding it. Tesla's another great one today. The sign that Tesla was in trouble was actually over a year ago when the CFO quit. And a real internal guy. And then when you figure out he quits, and then you can see what's going to happen to their P&L moving forward, it gets really, really, really.
So how low do you? How bad do you think the business?
Tesla is going to get cut in half.
Okay.
Yeah. But it's not the business is doing terribly badly. It's doing better than those automakers.
Would you agree it's a real business?
It is a real business. The problem is that real business is a single-digit net margin business. When you take out the royalties they're getting for all these other automakers for these pseudo-EV carbon credits, if you will.
But Bill, you were, I don't know if you still are, at one point you were long Tesla. And I don't know if I look back at the date, I think you probably did quite well on it, but
I sold that position.
Okay,
actually.
yeah.
I did pretty good.
So at the moment you have no position in
Not
Tesla.
right now, no.
Okay.
No.
I
I put $1 million in it. It was a good buy. I bought it when in 20 or something.
Yeah, that's a very good buy. I want to talk briefly about Reddit, and this is where I think Charlie kind of got it wrong a little bit. He was, because we had the GameStop of the world, the AMCs of the world, but if you want to call these short squeezes or whatever, these existed long before Reddit.com ever existed, right? You've been doing this for a long time. I remember Micron 20 years ago had this incredible short squeeze. I think Volkswagen had.
Oh, that was epic.
But maybe you could just explain to people on a basic level the dynamics of what happens here, because it's not just the retail investors on Reddit.
Yeah.
Like there's real market structure things happening.
Well, there was a huge market structure thing that happened that we'd never seen before.
Yeah.
Nearly every single adult American got a free check from the government of size. That was the event. And what do? Well, they start sports gambling.
Yeah.
They buy a new TV, update their iPod or whatever their iPhone is, and then they open up a Robinhood account. And we saw in a period of, say, 21 to 22, 20 years worth of new accounts opened, all compressed in an 18-month period. A lot of new. And what did they do? Well, their research is to go on Reddit and find out what everyone's doing. It's GameStop, it's AMC. We're going to craft these short squeezes, and it worked. It worked in the beginning, but it always works.
GameStop, to be fair, there was a fundamental case there. We were actually long it.
You guys were one of the first ones doing it.
Like we were long it. I'm going to get these numbers wrong, but there was a play from, call it 5 to 20 or whatever. But then I think what people discovered is this massive short position, right? Mm-hmm. And so you had people being forced to cover as more and more of these people were, not just these people, all people, and institutions were buying, right? We had a client that lost billions and a client that made billions on GameStop. So
I most probably lost if they were running hedge books.
Yeah.
And I know personally several that got cleaned out in AMC, GameStop.
Yeah.
I eventually found right, but many lost their jobs between point A and point B.
Yeah.
And that was really the game that they were trying to play at Reddit.
So the retail investor won.
For the short term, yes. Yeah. And then, reality sets in. Bed Bath & Beyond is one, AMC, and many others. In fact, right now, and I've said this many times on the show, we're looking at the largest number of bankruptcies of publicly traded companies that I've ever seen, encountered over the next 18 months. And, all these vast majority of them are already down, $1, $2, $3 a share.
Yeah.
And
do you think like Bed Bath & Beyond, you might not know much about it, but do you think if you had a good CEO in there, somebody who was not doing all these buybacks, was building a really good business, dynamic enough that they would have been able to save a company like that?
I'm not sure. I really am not. Because it could be, well, what do you do with that cash otherwise than buybacks? I can't really say.
I would want a cash flowing business.
I can't really say.
That's what you should do with GameStop.
Well, I mean, AMC bought a gold mine.
That's true.
He's got GameStop. Ryan Cohen's got $1 billion worth of cash. I think he should buy something. Buy something that cash flows.
Yeah.
And this thing can go up.
Yeah, well, they can, but that's really the issue, is that they'd have to pivot. GameStop is probably looking at negative sequential revenue comps from as far as the eye can see forever.
Yeah.
I mean, it's the Radio Shack of gamers. And
he's got to move quick.
Yeah, but that issue, and this, is like, unless he buys you, then I get long. but chances are they're going to make a terrible mistake. It's like, I don't know, 99.9%.
The only thing that gives me comfort is Brian Cohen, because I think he's a decent guy personally. But secondly is, he's raised in a good family environment, is a strong dad, et cetera. Is also that his other holding, his biggest holding from what I see outside of GameStop is Apple. So he knows to buy for his own portfolio something that's very good cash flowing asset.
Okay, I wanted to bring, actually.
I know that's not very motivating, but I'm just saying,
I think but I think Apple's a short too. So.
For the short term.
Short.
Yeah.
It's a cash flowing business. This guy's a stupid guy. He's having a Chewy.
Yeah, that's true.
Well, I'm short that one too.
This is how markets work. You can have intellectual good people can have both sides of a position or debate. I did want to bring in your brother to say hi.
Okay,
if he's around.
Oh yeah, let's get him in.
Well, on Twitter knows him now.
Well, he's coming in if he can make it in. We're going to wrap it up soon, but I wanted to ask both of you guys, for somebody that's new to investing, what is some advice you would give them? Like, maybe they're watching this, you've intrigued them in stocks or investing. Like, what is the first thing you do?
Personally, would be to read read and understand financial statements, the income statement, the balance sheet, the cash flow statement. I think that's what my message often is too with these retail shareholders and stuff, is I'm trying to educate people on all the parts that go into the income statement and whatnot. And that's why when Gasparino says, oh, well, you want people to lose money, first of all, I say, well, if they don't know anything, then they're definitely going to lose money. Second of all is, how do we educate them so they don't go and put all their life savings into something that has a terrible income statement, balance sheet. I mean, most people don't even know the 3 statements that go into finance.
That's true.
And it's kind of crazy.
Yeah, I agree entirely. Yeah. And that's where I get a lot of inquiries on Twitter. I want to, or he calls it X now, but I want to get involved with this. I want to get involved with that. I say, you got to learn how to read the P&L and understand what the pieces and parts, gives and takes are, what makes sense and what doesn't. But we have to be cognizant that the vast majority of retail investors right now, that those 20 years worth of investors that were compressed into an 18-month period, 21 and 22,
they're still learning.
Yeah. And for the most part, the only way that their research is price confirmation, price action confirmation. If it's going up, buy it. If it's breaking, don't buy it or sell it. And that's why we keep seeing so many stocks go chug, 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 chug right into a queue and then just blow the hell up. FedEx just did it recently. In fact, almost the vast majority of things that just blew up or just chug, 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 crash because nobody can do the work on it. And that is new to me, seeing so many people involved in a market that do not know how to do the work.
Okay.
It's all new.
We have another Pulte to introduce.
This is Steven. Steve's my brother, and a lot of people on Twitter know him. He is also helping run the communities with the new stocks that we have going on. And he runs a lot of mobile home stuff for us as well, transforming the communities as well as single-family rental.
And so people should follow him on Twitter, obviously. But also, are you starting to do a morning show too?
I think we're going to do that.
Yeah, no, just exactly.
So you're gonna be like me and listen to your brother talk like I do with Keith.
No, my brother's a very smart guy, but just answering your question in terms of my thoughts, when I was at Notre Dame, I studied finance there, and I ran our investment club. One of the best pieces of advice that I always gave was buy some stock, right? What stock? 2 shares, 3 shares, 10 shares, whatever it is. But you immediately start to care about whatever it is that you're doing when you have some stake in the game. So to accelerate your learning. I think I remember the first stock I bought, I actually lost a ton of money on. Relatively at the time, but that really gets you in the game to the point where you have a stake and you're learning. So
that's great advice.
One of the things we want to do on ours was just once again to continue.
Educate people. But I think with investing, the best investors I know work the hardest and study the most, right? And that is what's going to help you in any game, whether it's home building, investing, prevail over time. So I think. Yeah,
they're all addicted.
Yeah,
all of them. Tudor, Steve Cohen.
Yeah,
I mean, compulsive behavior of studying and trading.
Yeah,
and everyone who's successful has exactly those attributes.
So we'll help you guys out however we can. We've got these communities.
Yeah, that's awesome.
Hedgeye has just amazing resources.
I think we have some 3-way collaboration that can happen here. So I'm excited about it.
I think so.
Yeah. All right, everybody. Thank you very much for tuning in. Thanks for these gentlemen for joining us. Hope you enjoyed the webcast. Take care.